right, everybody. Welcome to today's webinar. I'm Jerry D'Ambrosio. Hope you guys are doing well. Thank you for taking time out of your day. We got a pretty nice turnout here for a Thursday afternoon. Kind of tough day in the market today, but hopefully we finish strong tomorrow. Just want to do a quick sound check, make sure everybody can hear me okay. Gary says hello, so there we go. Henry says, Henry Rudy, welcome Henry. Just if you guys don't mind, just type it in the chat box that you can hear me and that you can see my screen. Good. Donald says audio, visual good. Tom, Galen, Gigi, Clark. Hey Clark, how you doing? Jason, Robert, Joseph, Tom, fantastic. Well, hey Eric, how you doing? Welcome everybody to today's webinar, 4 chart patterns you must know to pinpoint your entries and exits. I do want to say thank you to my good buddy Glenn Tompkins. Glenn is in the background. He'll answer any questions that you guys have along the way. We're going to be together for about an hour. I won't take up too much more of your time, and I have a lot of content to cover. So if you ask a question, Glenn will answer it. But I will take some time at the very end if I do have time to answer some of the more common questions. All right, so I thought it best to start off by letting you know if you're in the right place or not. I don't want you guys wasting your time. So you're in the right place if you currently dedicate or want to dedicate a portion of your portfolio to short-term trading to grow your portfolio faster. Okay, and what I mean by short-term trading is holding a position for a few days, maybe a few weeks, all depending on performance. And our primary form of analysis is going to be technical analysis. We're not going to look at, too much about earnings per share or growth rate or value or sales growth or anything like that. This is for the money that you have set aside, maybe to trade a little bit more actively. We really hope you're doing that. We hope, you have a retirement account. In that retirement account, you're likely to have your core holdings, right? Your the stocks that you've based your selection on fundamentals, right? Fundamental valuation. That's when you pay attention to earnings and growth rate and sales growth and value and relative safety if you're a VectorVest indicator. So maybe you also have money set aside to trade options. We have some great option courses here. Maybe you've taken a few and you're dedicating a portion of your overall investment capital to that type of an investment instrument. And then we find ourselves here looking at shorter term swing trading using technical analysis as the basis of our stock selection. So if this is you or you want to start doing that, putting some money, setting some money aside for some swing trading, you're definitely in the right place. If you'd like to have more winning trades than losing trades so you can get steady, consistent, reliable growth, and if you want to feel confident in your decision that you bought the right stock at the right time and that you'll sell it at the right time. And, that's what today is all about, pinpointing entries and exits. And when it comes to trading, because you're not in a position all that long, pinpointing entries and exits is really important, primarily exits. And that's something that we're going to talk about today. Okay? My promise to you is this. In this webinar, you will see how that you can use technical indicators to pinpoint when to buy, what to buy, and when to sell so you can reduce time, increase your accuracy, and of course, improve your results. And by that, I mean you can reduce your trading time to just minutes a day. Okay? You can increase your accuracy to between 50 to 60% winning trades. Remember, we want more winning trades than losing trades. And you can improve your results. We're trying to maybe get 25 to 30% per year, at least, hopefully higher, right? This is not your retirement portfolio, right, where you're okay with 10 to 15% a year. We're trying to really supercharge and boost profits and trading a little bit more aggressively, I'll be honest, helps us do that. It's about managing risk though, okay? Now the center of these 3 circles is really where we want to be, okay? It results in more time and money just to do the things that you want to do in life. And the key takeaway, the main thing I want you to take away from today's webinar is that you need to make sure to use the right tool for the job. What do I mean by tool? It's the software or the website you use to find and manage your trades. It could be your broker's tools or website, could be other software that you purchase. Today I'm going to be showing you how to use technical indicators to be successful, and as I show you, I'll show you the tool I use, and at the end, I'll show you how you can try out the tool if you wanted to. But in the meantime, I'm going to be giving you information and techniques you can start to use immediately. Okay? So here's what we're going to cover today. First, we're going to talk about how to use top technical indicators. And what I mean by this is you'll understand what the indicators are and how to use them just to pinpoint your entries and exits, when you're going to get in, when you're going to get out. And this will help improve your trading accuracy so you get more winning trades. Next, we'll talk about when to search for trading candidates. In other words, there is an ideal time to be placing these trades. This will help improve the results you get each year. Third, we'll then talk about how to search for trading candidates, and you'll learn how to narrow down your list of candidates from thousands to just a few. And this is going to help reduce the time you spend every day trading. And then finally, how to automate your trading system. I'll show you how you could take the techniques you'll learn today and set up automated systems to send you alerts when a trade needs to be made and exactly what trade needs to be made. Just some quick notes. I'm going to try to keep this interactive. We get so much more out of it when we interact together. So, and you guys have been good so far using the chat box. There will be several times throughout the webinar where I stop and I'll answer some questions. Maybe I'll pose a question to you folks, and we'll just kind of interact back and forth from time to time. I promise I'm going to give you everything I can over the next hour. So if you're ready to go, I am. So the first segment here is about how to use top technical indicators to pinpoint entries and exits. Earlier I told you one of the things we'd focus on today is improving your accuracy. Well, you're going to learn how to use these indicators to pinpoint entries and exits, and this is going to increase your trading accuracy so you get more winning trades. A lot of people struggle finding trades because they just don't know what to look for. It's like back when we were in school, right? When I was in, I'm aging myself here, but I was in middle school in the late 80s, and I remember the Dewey Decimal System, the card catalog. And I just found it so frustrating because if you didn't know what to look for, it was nearly impossible. Okay? And that's how a lot of traders feel. If they don't know what to look for, it's going to make it a little difficult to feel confident in your decision that you're going to buy the right stock and hopefully it becomes a winning trade. Instead of not knowing what to look for, you want to look at a stock and have the patterns really just stand out at you very clearly. You're looking at a bunch of Legos here. I used to play poker. It's been a while, right? We don't get together a lot anymore, if at all, and sit down at a card table. Things have changed. But back when I used to play poker in front of people live, a buddy of mine told me a story. He's a Lego collector, and he would tell me a story where he'd be able to look at just a pile of Legos and know exactly which pieces belong to the most valuable sets. He was immediately able to do that. It's all because he knew exactly what to look for. And when it comes to chart reading, you're going to be the same way over time. If you really study this and dedicate yourselves to being better traders and being better chart readers, you're going to get there. So it's all about knowing exactly what to look for on that chart. Perhaps one of the most popular technical indicators is MACD. It stands for Moving Average Convergence Divergence. It's a great indicator to help pinpoint meaningful changes in a stock's price direction. Excuse me. It's a trend-based indicator because it's based on a 12 and a 26-day exponential moving average. Now, it's not important to get caught up in the calculation or the formula of the MACD. If you want to go and Google a MACD, you'll get everything you need, as far as the indicator, how it was calculated, who created it, the formula, all that stuff. What's important to me is to discuss how to use it, how to use the indicator. Here we see a graph of NRG. It doesn't matter the time frame. Okay, I've added MACD to the bottom of the chart. Now, the most common use is to look for times when the MACD histogram crosses above or below the 0 line. Let me make sure you guys can see my pointer at all times. The histogram are these yellow bars. So what we're looking for are times when the histogram goes from below 0 to above 0. This is a great indication that there is a change in the stock's trend. And you can see, we'll go through several examples here on this chart, and you can go through chart after chart. Just ask yourself, when looking at bullish MACD crossovers, again, a bullish MACD crossover is when the histogram bars go from below zero to above zero. That's a bullish crossover. MACD doesn't catch the bottom. You're likely to be a few weeks off of the swing low, because again, it identifies changes in trend. In a moment, I'm going to show you an indicator or two that are much better at catching pivot points, catching swing lows, maybe a couple of days off of those levels. MACD is different. Okay, so did we have an opportunity to make money here? We sure did. Okay, we'll go to the next bullish MACD crossover. What about here? I know what you're thinking. You're probably thinking, well, I'll get to the bearish crossovers in a moment. Okay. Here was a bullish MACD crossover. Did we have a chance to make money here? Absolutely, right? Stock gapped up, continued to move higher. We're looking at higher highs and higher lows. Here we have another MACD crossover. Did we have a chance to make money? We did. Now, what are you starting to see? What type of pattern are you starting to see here with this stock? Higher highs and higher lows, right? So what I would really emphasize here is to apply the MACD to stocks like this. Stocks like this meaning trending stocks. Stocks that go from bottom left to upper right. All right? Once you start to get into applying the MACD to channeling stocks or non-trending stocks, if you've ever tried to do that before, you know that it doesn't it produces more losing trades than winning trades. That's not what we're trying to do. So the focus here, what I want you to take away from really application of the MACD, is to apply it on stocks that look like this, trending stocks. Okay? Now, not every trade is going to be a winning trade here. As you can see, probably broke even if we were using the bullish MACD to get in and the bearish MACD to get out, right? Which is what you want to do. Here we're talking about pinpointing not only entries but exits as well. So a bullet in an uptrending environment like you see here, a bullish MACD crossover is an entry, and a bearish MACD crossover is your exit. Okay? Bullish MACD crossover is your entry, bearish MACD crossover is your exit. So let's look at the exits here on this uptrending stock. Remember where we got in? We got in somewhere in this area here, a couple of weeks off of that bottom, began a meaningful change in trend, a meaningful change in direction, got a bearish crossover here. So you're probably looking at that bearish crossover and saying, well, if I sold it there, I missed out on that gap up. And you did miss out on that gap up. You had an opportunity to get back in because you didn't know that the stock was going to gap up 4 days after you sold it, right? We're looking hindsight here. I'm going to show you in a moment how you can't think like that. You shouldn't think like that and say, I shouldn't have listened to the signal, or I shouldn't have followed the signal because this would have happened. I would have made a lot more money. So here was our bullish crossover. There's our bearish crossover. And you see the stock kind of went higher a little bit for the next couple of weeks, but then really started to break down. And notice that the MACD histogram stayed bearish the entire time after it crossed into negative territory. So we're out of the trade this entire time. We're getting back in on the bullish crossover. We're going to get back in on the bearish crossover. Get back in on the bullish crossover, get out on the bearish crossover. And you can see in an uptrending stock, it really does a nice job of getting you in close to the low and getting you out closer to the high. Okay? Here we had a bullish crossover. We get back in, out, a few days, maybe a week or two off of the actual high. And here's that trade where we may have broken even or maybe a small little loss. But remember back here when you said, let's think about if you were really in the trade and you got out in this area only to see the stock gap up and you missed out on all those gains. You said, I shouldn't have sold it, right? Well, if you start thinking that way along the way, and maybe you don't sell here because you think the stock is going to continue to move higher, and then what happens? It just falls. Okay, so in an uptrending stock, you are going to get more profitable bullish crossovers than losing crossovers, losing bullish crossovers. Okay? That was a beautiful exit, right? Dead money there for quite some time. Okay? So the main focus, the main thing I want you to take away from that is, let me ask you this. Imagine trying to apply the MACD now to this type of an environment, to a non-trending stock. You're going to get bounced around a little bit too often, and that's not going to result in more winning trades than losing trades. Okay? Yes, Ron, these are daily charts, daily price bars, not intraday or weekly, looking at daily charts. Okay? So apply the MACD to stocks that are consistently hitting higher highs and higher lows. Don't apply the MACD to stocks that look like this. Okay? What we're going to talk about here is support and resistance, and it's another very popular trading technique to use support and resistance levels. One of the great things about the VectorVest tool is it has a way to automatically draw the support and resistance lines on the chart for you. You can draw your own if you see an additional support or resistance level that might not be on the chart. You can draw your own as well, but the VectorVest tool automatically draws them for you. Okay? Let's take a look at what I'm talking about. Before we get too deep, what is support and resistance? Basically, a support level is a point where stock prices have stopped going down and they begin to go back up, typically multiple times. It's where demand is deemed strong enough to push the price higher, to support it from falling any further. Resistance is a point where stock prices have stopped going up and they begin to come back down. Again, typically it happens on multiple times, at least 2 times. It's where supply is deemed strong enough to push the price lower, to resist it from rising any further. And it's the ultimate crowd mentality indicator. Think about it this way, or in terms of this. You buy a stock, you watch it go up, but you don't sell it. Why don't you sell it? Because you think it's going to continue to go up. And then what happens? It comes crashing down for a few weeks, maybe a few months. And what do you say? What do you say to yourself? You say, well, if it ever gets back up there again, I'll sell it. Okay? Then what happens? The stock gets back up there again. People who bought it somewhere back here the first time, what do? They sell it. It puts tremendous pressure on the stock's price. Okay? And it's going to continue to fall. So how do you use support and resistance in your trading? Number one, let's talk about the buying opportunities. There are 2 buying opportunities. Buying opportunity number 1 is when you see price hitting support and retracing from it. Hitting support, retracing from it. Hitting support, retracing from it. When you see price hit a support level and retrace from it, that's bullish. Typically, price is going to continue to the rise until at least the next support level. And generally, you'll see a little bit of a hesitation at that next support level. Okay, so price bouncing off support, that's a buying opportunity. Buying opportunity number 2, is when you see price breaking through resistance. Okay, breaking through resistance, especially on high volume. So we think about it. We already said that there was that built-in selling pressure, right, around those zones, around those resistance zones based on the crowd mentality. Well, if a stock is able to overcome that selling pressure and bust through that resistance level, that's very bullish. Very bullish. That's another buying opportunity. So 2 buying opportunities using support and resistance. Retracing from support or breaking resistance. And both really you'd like to see high volume, right? High volume during either a support retracement or a resistance breakout. Second, you can also use support and resistance to indicate when to sell an existing position or to initiate a short position. So bearish situation number 1 is if you see price hitting resistance and coming back down. Hitting resistance and coming back down. That's bearish. Typically, price is going to continue to fall until at least the next support level, typically. So if you do own the stock, if you're in the trade, you should consider selling it or taking other defensive actions when you see price retracing from resistance. If you don't own it, that would indicate a possible shorting opportunity. And additionally, if you see price breaking down through a support level and moving lower, that's bearish. Typically, the price will continue to fall until it reaches the next support level. Maybe you get some hesitation at that next support level. You don't really know what's going to happen, right? Price could retrace from that next support level, which is bullish, or break down through it, which is bearish. So if it's a long position that you're still in, as price approaches support and then eventually breaks down through it, that's an indication to sell that long position. If you're not short, if you're not long the position, that could indicate when to initiate the short position. In a moment, I'm going to show you how you can automatically find stocks exhibiting these patterns. Another oscillator is the stochastics oscillator. It's probably my favorite technical analysis indicator. I use stochastics, I pair stochastics with candlestick reversal patterns. For example, I love looking at, bullish haramis and engulfings and white soldiers and piercing patterns or hammers or any type of bullish pattern when I have a really oversold stochastics. I like looking at bearish candlestick patterns when I really have an overbought stochastic. So I really like this indicator a lot. As with other oscillators, it helps pinpoint overbought or oversold conditions. Now again, don't let all the squiggly lines confuse you. It's not confusing. Again, if you want to know more about stochastics, just Google it. We're going to just kind of show you how to use the indicator. On the lower end, so it oscillates between 0 and 100. And on the lower end, or the level that's considered oversold, is the level of 20. The level that's considered overbought is above 80. I'm only going to show you the buying opportunities here. We're only going to go through the bullish crossovers or the buying opportunities. Now, would you agree that when stochastics was below 20, it was somewhere near a low point, right? Somewhere near a buying opportunity. And we have a nice uptrending stock now, don't we? And you may look at these, you're saying, okay, well, stochastics is telling me that I'm in an oversold situation if it's below 20. You look at price and you say, that's not oversold, right? Or that's not oversold, or that pullback, that's not really oversold. So you're looking solely at price and thinking that you're not in an oversold position. That's what these indicators are for. They help us make sense of price more than we can kind of do ourselves with the naked eye. So yeah, that little pullback there, according to the stochastics oscillator, is considered oversold. All right, and it's again somewhere near a nice buying opportunity. So just because stochastics goes below 20 doesn't mean that we're going to buy the stock, right? That's kind of the setup. Stochastics going below 20 gets us ready to enter the trade. We actually take the trade when the stochastics oscillator crosses from below 20 to above 20. And as you can see here, this is going to get us in a little bit closer to the bottom, a little bit closer to the swing low. Okay, good opportunity there. How about here? Sure, another good opportunity. We're still in a nice uptrending environment. We're catching it, somewhat here in this case as it's kind of just moving sideways. But this bullish stochastics crossover resulted in a profitable trade. What about here? Definitely. Now we're like 1, 2, 3 days off of that swing low. Stochastics probably would have gotten us in somewhere in this area, right? Maybe about a week or two off of the swing low. Not stochastics. I'm sorry, the MACD. Stochastics is getting us in a little bit earlier. Next bullish crossover was here, 2 days off of the new higher swing low. Same thing here. So we're in a nice uptrending stock. Okay. So let's kind of combine some of the things that we've learned so far. Okay, I talked about support and resistance and how you should react to support retracements or resistance retracements, right? And how you should become bearish if you're long when a retracement off of resistance happens. Okay, so here we have a bullish stochastics crossover. Couple of days, maybe 3 days off of the low. Got a nice bullish harami here as well. Okay, nice bullish harami with follow through. Okay, stock got crushed. That's definitely an oversold position, right? Look at that crash there the stock went through for a couple of weeks there. Now what I'm looking at, and this is part of chart analysis and really candlestick analysis as well, I'm looking at the most recent swing high. And I'm looking at the candlestick formations that occurred at the most recent swing high. And what I'm noticing, which stands out to me, are the really long upper wicks of those candlesticks. That's not bullish, guys. That's not bullish. In an uptrend, when you see long upper wicks there and closes well off of the highs and closer to the lows of the session, that's not bullish. I know they're green candles, which means the stock closed higher on those days than the previous day. But it's important to know where the stock closed compared to the high as well. And in an uptrend, if I'm looking at these long upper wicks, that's telling me that the trend is weakening. Okay? Buyers aren't able to, or the bulls aren't able to keep the stock near the highs of the sessions. So bears are kind of rearing their ugly heads, right? And coming in and pushing the stock off of the highs. So I'm looking at that level, looking at the swing high as a level that I'm going to pay very close attention to. What happens? The stock reaches that level. That's good, right? We get in here. Stock reaches that level. That also coincides with it being in an overbought situation. So what I'd like to see is when the stock reaches that level is to bust through it. But it doesn't. It pulls back off of it. And what is it now done? What does it now create? It creates a resistance level, right? You got a couple of touches there in that zone. So price failing to make a new high and retracing and establishing a resistance level, we already said that that's bearish. You should consider selling it, taking other defensive actions if you see that happen. Okay? You do. You wait for another opportunity to get back in. So the stock falls, stochastics enters into the oversold position again. Now you have a stochastics that goes from below 20 to above 20. We know that's a buy signal. What also is happening here, or where did the stock stop going down? It essentially stopped going down at the same level that it stopped going down here, right? So it's establishing a support level. It's not an exact price point, by the way. I should have mentioned this when I was talking about support and resistance. Support and resistance are zones, not exact price points. So the price of the stock entered into that zone again, the same zone where the stock stopped back here. And then it retraced from it along with stochastics crossing from below 20 to above 20. You see that doji there? You see that follow through day? There's your entry. What happens after you enter the trade? The stock crashes, right? One big red candle there, and you're panicking. You're thinking, man, I just got in the trade. Now I got to get out because the stock goes down this, one day. Well, hopefully tomorrow and moving forward, you're better equipped to manage trades like this because you know that you entered this trade off of a support retracement, right? Well, the stock goes down the day after you buy it, but does it ever break through that support level? It doesn't. Never falls below the support level, never falls below the most recent swing high here, a swing low here, and then eventually rallies and retraces from that support level. So you're thinking, okay, all right, now I'm in the clear, right? I'm kind of back to even now. But then what happens? The stock falls again. You're thinking, oh, what do I do? What do I do now? Well, you have this support level that will protect you against future downside risk. The stock reaches that level again and then stops. You see that this green candle here? That's called a hammer. Remember I talked about how long upper wicks at the end of an uptrend should concern you if you're bullish. Well, long lower wicks at the end of down moves and at support should encourage you that the bulls are now back in the action. Okay? So we were prepared to exit the trade if the stock broke down through support, but it never did. It formed a hammer right at support and then rallied. And now you're in the clear, but don't forget that resistance level that we have up there at about $64 or so. The stock reaches that level again. You hope to see it break through it, but it doesn't. It retraces from it again, establishing a really significant resistance level there. You exit the trade, always knowing that you can get back in. Now, price in this case doesn't fall all the way back towards support, but stochastics goes from below 20 to above 20 there, and we were able to get back in. Well, that resistance level doesn't just go away. It's still there. So we get back in off of this stochastics going above 20. We're in the trade a couple weeks, and then the stock stops at resistance, and you see that big red candle. I'm out of the trade. I'm out of the trade. I'm telling you I'd be out of the trade, even knowing what the price of the stock did the following day and the next couple of weeks. I'm not going to sit here and tell you that I would have held on, because that's not how you trade this system. That's not how you use the indicator. So you get out at a gain, right? Get out at the gain. You can always get back in. When would you get back in this case? So if you get out on that resistance retracement, when would you get back in? Well, what happens a couple of days later? Price breaks out through that resistance level, doesn't it? What did we say about, price breaking resistance? That's bullish. Okay? Price broke through resistance, so you could have entered the trade. Then what happens? Price falls. Where does it stop? It stops, okay, by the way, when price breaks out through resistance, that resistance level becomes support. So price breaks resistance, you take the trade, it falls back towards support to test it, it stops at support, retraces from it, allowing you to stay in the trade. It breaks down again, retest that support level again. You're thinking, when am I going to get out? Well, you're going to get out if price breaks down through that support level. It doesn't. That retest of support also coincides with stochastics going from below 20 to above 20. Okay. This question is, how do you know the support level on 4.4 of 18? We can see the support line now. Sure, I'll go back. 4.4 of 18. This one right here, or this one? Okay, so you need at least two touches in the same zone to establish support. So when price failed to make a new high here and retraced from it, that's two touches in that zone. That's establishing resistance. So that it established it here. It retested it here, and it retested it again here. Okay. Now support here was your first touch of this recent level here. So when the stock failed to make a new low and stopped essentially at the same level that it stopped back here and retraced from it, that's establishing support. Okay? Then you had another retest, another support level. Okay? So time and time again, you're using a combination of stochastics and support and resistance to help get pinpoint entries and exits. Here we have a bullish stochastics crossover. This would have resulted in a losing trade, right? Because we get in on the crossover, we get in on that breakout. We're thinking this is great. We got a series of higher highs and higher lows, and then the stock breaks down, and your exit is the swing low that you entered off of. There's your exit. So the stock breaks down through that level. You exit. You don't know how far it's going to continue to fall. Doesn't fall all that much, but then stochastics goes back from below 20 to above 20. You're always able to get back in. You're only off of the bottom by a day. Okay. Now you're getting into a situation where you start to establish support and resistance levels again. Okay, you're getting into the sideways action where you start to establish support and resistance levels. All right, give me one moment here, guys. I'm sorry. Okay. Okay. Remember my promise at the beginning was one of the things I promised you is that technical indicators can help improve your accuracy. In other words, it can help you increase your winning percentage. We're hoping to get between 50 and 60%. We want more winning trades than losing trades. If you go back to the MACD and you focus now moving forward on using the MACD in an uptrending stock environment, you will see that it's going to produce more winning trades than losing trades. If you start to combine stochastics and support and resistance to help pinpoint entries and exits, you get in on a stochastics bullish crossover, you see the stock's price hitting resistance and retracing from it, you're out. Okay, so bullish and bearish situations with support and resistance, along with stochastics crossovers, will help you get more winning trades than losing trades. Okay? Next, you need to know when to search for these trades. It's not enough just to know what the indicators are. We want to put the probability of success in your favor. And to do that, you need to know the best time to trade. This will help improve your results, reduce your drawdown, and increase your winning percentage. I've talked to a lot of traders over the years. Many of them don't know when to enter a trade. They say they get confused because they're getting mixed signals. They have no confidence in their signals. They have no confidence that the trend will continue. Instead, you want clear signals telling you that it's time to enter the market, okay? Which gives you confidence that the trend will continue. So why is this important? Markets go up and they go down, all right? We found the best results. And so this is your fourth chart pattern. This is your fourth chart pattern to help you pinpoint entries and exits. But here we're going to finish with the market. We found that best results are when you only buy during up markets, stop buying during down markets. Now, while some people use the moving averages on the S&P, let me show you what we found very effective. So I've just zoomed in a little bit here, a little bit closer. Now I don't have time to get into all the details of how it's calculated. The software takes care of all that. Basically, we found it better to look at over 8,000 stocks instead of just the Dow 30 or the S&P 500. We're looking here at what we call the VectorVest composite. Okay, that's our 8,000 stock index. One of our best signals, our best market trend signals, uses technical indicators just like we talked about today to signal changes in trend. We call it our DEW timing system. The DEW represents the technical indicators used, such as the detrended price oscillator, envelopes, and a 30-day weighted moving average. So basically, we look for when the DPO, when the signal changes, we look for a green arrow on the chart. Very simple. Okay, green arrow on the chart means that it's okay to buy. Red arrow on the chart means to stop buying. I'm not saying to to close all your positions. You just stop buying. Overall, just does an excellent job of keeping us and you on the right side of the market. And I just love how it's very rules-based. There's no guesswork or emotions involved. Right? Very, very simple. Okay, we're still, again, it was a 20-day DPO, by the way. It's a 20-day DPO. Remember my promise at the beginning? One of the things I promised you is that technical indicators can be used to help improve your results. In other words, using a signal like the DEW can increase your results each and every year. Next, you need to know how to search for these trades. So you know what the indicators are now. You know how to use the indicators. You know when the best time is to buy the stocks. DEW up situations. Now we have to know how to search for these candidates. And it's, you need to be able to narrow down your list of candidates from thousands to just a few and not spend hours upon hours doing it. When you're able to do it this way, it's going to help reduce the time you spend trading. Another side benefit, if you do it like I'm about to show you, it can also help improve your results. Problem is, even when you know what technical indicators are and how to use them, and you do now, it's still up to you to find what stocks to actually trade. Now, sometimes it feels like trying to find a needle in a haystack. You go through hundreds of charts. It's just so time consuming. I like looking at charts, but I like looking at charts after I've filtered through a list of stocks that meet the criteria that I'm looking for. I'll explain what that means in a moment. But with the right scan, you'll have trading candidates right at your fingertips. Let me show you how we do it. There are three main ways to find your trading candidates. There's doing it one by one, which means you look at one graph after another. That's where you could be looking at 500 charts in a day trying to find these patterns. Then there's using a search or a scan. This is how I love to do it. Help narrow down the field of candidates from thousands to just a few. Then there's getting automatic alerts of trading candidates meeting specific criteria. So we'll look at each one. For example, the one-by-one method, you go into the S&P 500 watch list in VectorVest, and you go through you graph all of them. And let's say you want to look for a MACD crossover. You're in a nice uptrending market, for example, right? And you want to look for a bullish MACD crossover. You'd go through the charts, right? Chart after chart. You put the MACD at the bottom of the chart. You'd go through the chart, and you look at the hard right edge, and you'd say, is the MACD first crossing bullish today? Not a week ago, today. And if it's not, you move on to the next stock. And you keep doing that. You keep doing that. You look at stock after stock until you find a handful of candidates that could be potential trades. Now, that's very time consuming. Okay? VectorVest has a search tool within our real-time program called ProTrader. Plugs right into the main software. I know most of you might not have this tool right now, so if you don't, just keep an eye on what I'm doing so you can kind of see what it does. ProTrader is a technical analysis scanning tool that finds stocks exhibiting the patterns that we talked about. For example, we have a scan that finds stocks whose stochastics is crossing above 20 within the last 1 day. So essentially what it does, it's finding that initial crossover from below 20 to above 20. And the scan is sorted by VST. So this is where the VectorVest proprietary analysis comes into play. Because we could run a stochastics crossing above 20 search, and we can have 3,000 stocks, right? Who knows? Who knows how many stocks had a stochastics crossover on any given day? So how would we know which are the best stocks compared to which ones are the worst stocks? That's where our analysis comes in. The scan is sorted by VST. That brings the stocks to the stocks with the best combination of value, safety, and timing up to the top of the list. Okay? We also have scans that find stocks that are breaking resistance. Remember, we said that was bullish, right? Or breaking support, or retracing from resistance, or retracing from support. MACD crossovers, RSI crossovers, moving average crossovers. So the ProTrader tool is really a must for those of you that are traders, that need technical scans. And every trader needs a technical scanning package of some sort. So that's what our ProTrader module does. Let me show you an even faster way. It's by using automatic alerts. We have a tool called the Watchdog, also built right into the real-time program. It scans the entire VectorVest database for you throughout the day, so you don't have to be in front of your computer running scans. You know, I have a few running, all the time that look for MACD crossovers on the S&P 500. I got some Watchdogs that look for support retracements or resistance breakouts, things like that. Okay. You can be out and about. Get these MACD crossover alerts. You'll get the alerts via email, text message, if that's how you have your alerts set up. And if you need help setting that up, guys, just give our support department a call. They'll walk you through it. But you'll get the alerts as soon as the crossover happens intraday. You don't have to wait to the end of the day to see when the crossover happens. You'll get those at the very as soon as it happens on an intraday basis. Okay. How much time would that save you? Now, it's going to save you a heck of a lot of time if you had ProTrader and clicked a few buttons and ran the search, as opposed to just going through the chart after chart after chart. But the Watchdog saves you a whole bunch of time. Instead of always being last to get into the trade and second guessing yourself, you're going to be kind of the first ones to enter. One of the things I said earlier is that technical indicators can be used to help improve your results, while also reducing the amount of time you spend. In other words, using tools like ProTrader and the Watchdog can help you drastically reduce the time you spend looking for trades, and it's going to help improve your results every year. And at the very beginning of this webinar, I said the main thing I wanted you to take away was that you got to make sure you use the right tool, the right technique, along with the right tool for the job. So here's a checklist of what we feel every tool should have. The tool you should have include technical indicators, and they should be displayed on the charts easily, very visually appealing. It should have searches that scans the database and scan for stocks meeting technical setups. It should provide you with market trend signals that have consistently worked. That's the DEW system that we talked about, where that's the best time to start buying stocks. when the DEW first turns up. It should have pre-built or customized automated trading systems and an alerting system which notifies you of possible trades. Okay? So with the VectorVest real-time program, here's what you're going to get. You're going to get VectorVest real-time. You're going to get those pro trader searches, the watchdog, the auto timer, which is a real-time portfolio manager, gives you alerts as well. Now the total value is $2,780. Here's a special offer for you folks. I want to thank you guys for joining me here today. I hope you learned something, right? We talked about some really popular technical indicators, how to use them. But the special offer for you folks is an annual subscription to the VectorVest real-time program for $1,195. So what I'm going to ask Glenn to do is type the address that you see at the bottom there, www.vectorvest.com/tradebetter. Now there is a $96 a year exchange fee if you have VectorVest 7 US. The Canadian exchange fee is a little bit pricier. It's $372. Now, I want you to forget about the $11.95 rate because for those of you that order before the end of today's webinar, I'm going to stick around for a few more minutes to answer some questions. I'm going to knock an extra $100 off. So you get the VectorVest real-time program, which gives you real-time ticking data throughout the day. The Pro Trader tool, which is that technical analysis scanning tool. The Watchdog, which is the real-time alert system, and then the auto timer, which not only manages your portfolio in real time, it also includes market trend signals. So you can input the DEW system into your portfolio and only buy stocks when the DEW is up, and it will automate that process. It'll automate those signals. Thank you, Glenn. So he typed in the address, guys, www.vectorvest.com/tradebetter, $10.95 for the year, and plus those exchange fees, no matter if you want the U.S. program or the Canadian program. Okay, so I'm going to answer a couple of questions. Robert says, if you already have VectorVest real time, I'm assuming Robert does, what would be the cost at annual renewal? Sure. If you guys already have an annual subscription to VectorVest real time, and you let it renew automatically whenever your renewal date is, it would be $1,295. So if you renew now, you'll be able to renew at the special webinar rate of $10.95. Okay? Now, it won't renew next year at $10.95 unless you come join me for this webinar again, which I will do at some point over the next 12 months. We do these probably once a month or so. We also want to give you folks who have a real time already the opportunity to renew at a lower rate. It would normally be $12.95 if you let it renew automatically. Dean is asking, any break for legacy subscribers, meaning elite subscribers? So Dean, this is the elite rate. The $10.95 is actually the elite rate for VectorVest real time. We kind of offer the elite rate during these webcasts, so that is the elite rate. All right, John says, how to renew now? Call in? No. Go to that website that you see at the bottom of the screen that Glenn put in the chat box, www.vectorvest.com/tradebetter. Okay? Sure. Jason says, can you please list what's included again? Sure, let me go back. That's what's included. VectorVest Real Time, which is $12.95 for the year, normally. Pro Trader, which you could buy for $500. That's a one-time fee. Watchdog, which you can buy for $500. Auto Timer, which you can buy for $500. That's a one-time fee. Okay? Henry says, can this presentation be replayed? Well, what's going to happen, guys, is in about an hour from now, you're going to get a recording of today. Okay? You're going to get a recording of today's webinar. So, Jason, are you good? Can I continue? You said you wanted to take a picture. That's what's included. I'm going to go ahead and move on. Good. You're welcome. Okay. All right. A couple of other questions. Let's see here. Talked about how what it costs for an elite member. I talked about that. Okay. Barry says, I have end of day. What is the cost to upgrade? It's $10.95. So, correct me if I'm wrong, Glenn, but from what I understand, let's say you have end of day subscription, and let's say you have 6 months left on your end of day subscription. From what I understand, if you upgrade your subscription, Yes, I can.
Okay, yeah. If whatever time you have left, I think now we've even changed it. We stop the subscription right then and there.
Right.
We take whatever was left in your current subscription and we, put it towards this price and start your subscription that day with the new price that's been offset by whatever you have left.
Okay.
I probably confused the heck out of everybody, but
Yeah.
that's the gist of it.
Okay. Um, you're not going to lose any time. So what's either going to happen. I think one of two things will happen. You will get a refund, a refund of the remaining time that you have left, and get billed the 1095 right now, which would start your annual subscription right now, or you would the remaining money that you have left on your subscription would be credited towards this, and you wouldn't get billed the whole 1095. Either way, give our support department a call. I think it's the former, to be honest with you. I think what's going to happen is you will get a refund of the remaining time that you have left, and then you will be billed 1095 for the year, and your year will start now. That's how I understand it. That's the most recent.
That's what I just said.
Good, good, good. Okay, okay.
Okay.
All right. Question is, I have end of day U.S. and Canada. Will I lose U.S. if I take the Canadian package? No. So what's going to happen is if you take the Canadian real-time package, you will get VectorVest intraday U.S. for free. Okay, so if you sign up and you sign up for VectorVest Real-Time Canada, we will give you the intraday version of the U.S. program as part of that subscription. Okay. Clark says, isn't this included in the Trade Like a Pro I just bought? The real-time package is, Clark, yes. So you're in an interesting situation. So Clark just registered for our Trade Like a Pro course, which is going on right now, and part of that course, and a bonus, is a 60-day trial to the VectorVest real-time program if you don't already have it. Okay, and what we call event pricing means that after the 60 days, Clark has the opportunity to continue with the real-time program for that price that you see there, that 1095 price. Okay, so it's the same package, Clark. No, so the searches that you got, the Trade Like a Pro searches are different. That's just exclusive to people who register for the Trade Like a Pro course. So not those searches. All right, Shaman says, I enrolled back before the 4th of July. I got the most premium package. I think I have the real-time package, but I still don't know if I have all the features. If you have the real-time package, you do have all the features. If you're confused about what you have, give our support department a call and just say, listen, I have the real-time package, I have the premium package. What all comes included? Do I get Pro Trader? Do I get the Watchdog? Do I get the Auto Timer? If I do, show me where they are. Okay, Shaman, if that makes sense. Okay, but if you have it the real time, you have all everything that I talked about. All right, John says, I'm in. Thank you. Welcome, John. Awesome. Mario says, is the Profit Locker, does real time include the Profit Locker? It does not. It includes the Profit Locker, but not the Profit Locker Pro. Okay. John says, I registered for the real time package. Awesome, Joseph. Welcome aboard. Henry says, can I enroll here now online during the seminar? Yes, if you should do that if you want to get that 1095 rate, because that 1095 rate will not be available for too much longer here after I close up shop. Okay. And it's vectorvest.com/tradebetter. Joseph says, but I didn't get this package. Again, you did. If you have the VectorVest real-time program, Joseph, you have real-time data, you have Pro Trader, you have the Watchdog, you have the Auto Timer. If you're unaware or unsure of where those products are or where those tools are, give our support department a call. Okay? You're welcome. Yeah, so Henry, yep, thank you, Glenn. Click on the link in the chat box, guys. It says www.vectorvest.com/tradebetter. Fill out the form there, and you'll have access shortly to the real-time program. Thank you, Glenn. Appreciate it, man. Okay, Mario says, I have end of day and will like this deal. Fantastic. Go to that website, vectorvest.com/tradebetter. John says, this is one big money-saving hour for sure. Aren't you glad you registered for today's webinar, huh? So Mario, yeah, if you have end of day, go to that website, www.vectorvest.com/tradebetter, fill out the form. You will no longer have your end of day program, and you'll get the real-time program for a year, for an entire year, for that $10.95 rate. Okay, question is, if ProTrader, Watchdog, and AutoTimer are one time, what happens when the year is up? No, so those products are included in your real-time subscription. So as long as you continue with the real-time subscription, the VectorVest Premium, you will get those tools. They're included in the real-time package. If you, after your annual is up of real-time, and you say, you know, I want to go back to my end-of-day program, you do lose those tools. Those tools are part of the real-time package. Support number is, you ready, Joseph? 888-658-7638. 888-658-7638. Okay. You're welcome. All right, guys. Well, I want to thank everybody for joining me here today. Hopefully you did learn something, right? We gave you an opportunity to, to upgrade your subscription for a much lower price, for the year. So hopefully you take advantage of it. Again, it's www.vectorvest.com/trade-better. You're welcome, Joseph. Paul says, yes, but I would like to live in the USA. Well, a lot of people do. But anyway, all right. Take care, folks. Have a great rest of your day. Hopefully we got a better day in the market tomorrow. Finish off the week on a good note. But have a great weekend, everybody, and we'll see everybody again soon. Take care.